afternoon and welcome to Stock Market Today, sponsored by Interactive Brokers. On today's show, we're going to be taking a look at the software sector as well as two home builders and Aaron. The stock that has been on the rise as of late. But first, let's take a look at the major indexes. It's Alyssa Coram here with Justin Nielsen. And Justin, we did see the major indexes slip a little bit across the board. The NASDAQ finishing down about 0.3%, but the hardest hit among the three. What are your thoughts on what we saw today? Yeah,
so definitely the NASDAQ took the hardest hit. It was really because of tech getting hit very hard. You had ASML with earnings out today, and that kind of knocked things down a little bit in the chips. More importantly, you had software kind of knocking things down, and we'll get to that in a little bit. But in terms of the action, what you can look at is this is an inside day. And what an inside day is, that's when the high of the previous day and the low of the previous day kind of engulf what happened today. So that doesn't tell you much in terms of direction. You know, what that does tell you is you have to be watching, and the high of yesterday and the low of yesterday could act as areas where you need to be looking and seeing, okay, which direction do we go from here? You know, so the direction is kind of uncertain until you get across above either the high of yesterday or the low of yesterday.
Okay, interesting. But taking a little baby step back, do we have a little bit more of a positive environment for investors than we did say a week or two ago?
Oh, absolutely. You know, because the major thing is that we are back above that 50-day moving average line, and for as ugly as it might have gotten with growth stocks today, you still remained above that 50-day moving average line. And one of the little subtleties is actually yesterday on the NASDAQ composite, the 50-day moving average line turned back into an uptrend. So we got back above it for a few days, and then the uptrend, you know, kind of resumed in the 50-day moving average line. So that's one of the things that kind of shows you that there is a trend change potential here, but we're certainly, just as you thought it was safe to get back in the water, if you were in software, which was looking strong, looks like it was coming back, they were getting above their 50-day moving average lines, but they got hit, you know, so.
Right, exactly. We want to take a look at IGV, which is the iShares software ETF, and we did see that get knocked down about 2.4% and above average turnover, underlying the weakness today that we saw in software across the board, essentially on a bearish outlook with downgrades and lower price targets for a number of names across the group, which if you turn back the clock not too long ago to earlier this year, it was by far the strongest group, and even fundamentals looking incredibly strong.
In the computer software area, you had the security stocks that were on fire, you had the computer software enterprise that was doing phenomenal, and it was really kind of interesting. You know, we were a little bit cautious because usually the stocks that led in the previous cycle aren't the ones that will lead in the next cycle. But software was looking like it was looking pretty strong as it got back above the 50-day moving average line, as you can see here on IGV, and a lot of the stocks in the software sector also crossed their 50-day moving average lines. But you know, as you saw today, we're not out of the woods yet. So definitely keep an eye on this. We also have Atlassian earnings coming tomorrow after the close. So what the big news was today was in terms of the outlook for 2020. What team earnings are going to show us is a little bit about what's been going on in the last quarter. That's going to be the first shot across the bow there.
And maybe we will get some perspective from them on what outlook they are anticipating to see if it can corroborate what the analysts
but a lot of the analysts, I think, you know, what was kind of coming out is that they thought a lot of the estimates were, especially for 2020 and beyond, were maybe a little aggressive.
All right, well, we'll definitely keep an eye on that. And it just goes to show that you really do need to pay attention to sector rotation.
Yes.
Because leading groups aren't necessarily going to continue to be leaders. You have to be nimble.
Yeah, and we saw, especially if you go back to September 9th and September 10th, there was a lot of rotation happening on those 2 days. You didn't see it in the indexes. A lot of the indexes were flat at that point, but you definitely saw it in a lot of these former leaders.
That's right. Well, now let's turn our attention to two home builders. We want to take a look at Toll Brothers as well as Lennar, moving today as the home builder confidence rose this month. So benefiting namely these two home builders in particular.
Right. So it was the highest since February of 2018. I think it was in the 70s. So, you know, very, very strong reading in terms of confidence amongst home builders. Now, Toll Brothers is one that that is showing a pattern that is very familiar. You know, if you've been watching us for a while here, this is something you might have been seeing before, where you have a stock that's broken out strongly, and you can see that that's that big blue bar, you know, with the little blue shading. So that's where a breakout happened, and then it kind of slopped around a little bit. It held above its 50-day moving average line, and now it's retaken that buy point. We're seeing a lot of that in the current market environment of these stocks that retook their buy points. And the fact that they held on, not too bad, that's where we're seeing a lot of the strong relative strength lines. And you can see that here in the blue line that, you know, did really hold up pretty well. And so Toll Brothers is, you know, showing strength. And again, you've got this low interest rate environment that a lot of people are looking at in terms of being favorable for mortgages and people, you know, getting into homes, especially those millennials that were kind of shut out of the market for a while. And you know, that's what people are looking at in terms of the positive. Now,
yeah, that's right.
If we flip that over to Lennar, one thing about Toll Brothers is that if you look at this in comparison to Lennar or KB Homes or Taylor Morrison, you know, a lot of those stocks have been going up much, much stronger. They didn't take nearly as much of a break. They broke out and they just kept on going. So they're not retaking their buy points. They're just continuing on to move to new highs.
Yeah, that is really interesting. And I have the 21-day moving average on my chart. Yeah. And it looks like it's really been able to hold tightly against that.
Yeah,
so
definitely in the short term.
Move higher, short term.
Definitely in the short term, using that 21-day can be very, very beneficial, and that's something that you can put on as a custom moving average on MarketSmith.
Yep, exactly. That's what I'm looking at right now.
I saw it. I peeked over.
Yeah. All right. Well, last but not least, we do want to check in with Aaron's. Ticker is AAN, extending its gains up another 3% today. A couple days ago, staging a breakout, gaining over 9% here, and earnings are right around the corner.
Yes, so November 4th is when earnings come out, but for now what happened here was retail, the Commerce Department kind of announced what the retail sales were for September. Those disappointed. It was down 0.3% when expectations were for a 0.3% rise. However, retail actually had quite a surge today, and Aaron's was just one among many that saw a lot of movement there. So there was some volume in this as well. One thing I should have mentioned about the home builders that they were lacking is volume. So we did see volume come here in Aaron's, and unlike a lot of these stocks that we've been seeing where they broke out, they kind of slopped around, this is one that's been acting very strong, kind of came a little bit quickly off the bottom. So this is where you have to be cautious. We are still in that buy zone. You know, that's that 5% shaded area that we're seeing right above that line, that dashed line. So we're still in that buy zone, but when it comes up so quickly, so fast, in such a short period of time, and up so much, you almost expect a little bit of a pause here. So just be cautious for that. That's not something that would be unusual at all. But right now, Aaron's is looking very strong, and they have a lease-to-own concept that a lot of people are looking at in terms of being a huge growth area for them.
That's right. And with earnings right around the corner, even though this isn't a buy range and we are seeing the volume, fundamentals look decent as well. And then also it looks like the broader retail trend is in its favor. There is added risk with buying a stock heading into its earnings report.
Sure. You know, what you have to look at is, okay, those earnings are about 2 weeks away, a little bit more than that. So if you can't get cushion in that time, it might be very difficult to hold through earnings because you have that earnings risk where the stock can go up considerably, which people love, but it can also go down considerably, which adds to your risk. So unless you have a cushion, it's really hard to hold through those earnings reports.
But, you know, November 4th, there's some time.
There's some time. And given how strong it looks right now, it could give you a cushion before that earnings report.
Well, we'll have to see how that plays out. But that is it for today. We do want to let you know, in case you missed it, we have an episode of Investing Strategies out now. You can head to investors.com/investing strategies for that, where I sat down with the investment strategist at Edward Jones for a very interesting discussion, Neela Richardson. So definitely check that out. And we also have another episode of our podcast dropping tomorrow. We have a new episode that comes out every Thursday. It's going to be another good one with Arusha. So make sure you're checking investors.com/podcast for all the latest on that, and to subscribe for free on your listening platform platform of choice. All right, everyone, thank you so much for joining us today, and we will see you right back here tomorrow.
And you guys are